Happy December 12. My name is Jessica Ramir, market strategist here with Moomoo. As always, it's wonderful to have your company. Thanks so much for joining us. Lots of moves happening overnight. The Dow Jones, which tracks the 30 most influential US companies, hit its highest level in history. It rose 1.4%. Now, the key index has the 50,000 point level in sight. This has basically been supported by shares of Goldman Sachs and Visa rising 2.5% and 6.1% respectively. Following in hot pursuit, you've got Amex, JP Morgan, Home Depot. Also of note, what happened overnight is the equal weight ETF, which we track by the RSP, that hit a brand new record all-time high, and the Bloomberg Commodity Index is trading near its highest levels this year. All this is just a day after the US Central Bank, the Fed, cut interest rates for the third time this year, and they're kicking off that $40 billion of bond purchases a month from today. Now, all this suggests that investors believe the broad market and most companies stand to benefit from the US Central Bank basically pumping the financial system with cash and supporting the ecosystem as we know it. So will animal spirits come back to the market and pump up uranium stocks too? The reason we're talking about this today is because NVIDIA is hosting a summit on data center power outages. And uranium is, of course, powering most data centers. So uranium stocks should be on your radar. This is today's focus. Let's bring that into the centerfold. Uranium stocks, will they head back to new records next year? So we can track uranium companies via the world's biggest ETF that tracks uranium's companies. That's URA. I speak about this a lot. Now, this ETF has taken a hit. It's in a bear market. It's down almost 20% from its record all-time high. The reason for this is a couple things. Firstly, of course, it was embroiled with the AI sell-off. We also saw concerns about AI companies having really high debt levels. And critically, what we also saw was uranium companies were also hit by uranium production ramping up in Kazakhstan and Canada. And they are two large regions who produce uranium. Now, this pushed prices down for uranium, and that's why this ETF is a little bit on the nose. But given that we do have some data center outages, one of those we recently spoke about in the US. Now, this is starting to be an issue that's creeping up of late. You really have to wonder, these data centers, they're suffering from a lack of energy supply. So you've got to wonder, hey, when is this URA sell-off going to end? Here are some considerations. Firstly, let's consider the first International Symposium of Artificial Intelligence and Nuclear Energy was held in Vienna recently. And we basically saw formal collaboration of sorts between AI and nuclear power emerging. So nuclear power, we've previously spoken about this a lot, and this drum is getting beaten louder and louder. Nuclear power is set to be a proven scalable source for 24/7 low carbon power, and it's capable of meeting data center demand. So those thoughts echoed again very recently. Secondly, consider uranium prices have been very rocky. Last year, I spoke about them hitting a brand new record all-time high. And because we see higher prices, basically means you've got improving mining economics. So, of course, when you see higher prices, it's going to encourage mining companies to get in on the action, wouldn't you? So that's why mining activity has picked up. And vis-a-vis, you guessed it, the mining supply dynamics are a little bit off, and that means that near-term supply is on the rise, particularly from Kazatomprom and Cameco, some of the world's largest uranium producers. But uranium production has now grown so much. That's why we've got uranium prices down 28%. The question is, when will they turn around, bring up uranium stocks and that benchmark URA ETF? So Bloomberg estimates, Bloomberg BI basically, they are saying that uranium mining supply is going to rise by 23% from what we saw last year up into a fresh peak that'll last until about 2031. So this is the thinking why we could see uranium prices pressured. Now, the caveat and the catalyst that is needed to push uranium prices back up is we need the supply demand dynamic to tilt and basically say, hey, we can't, uranium prices are not going to stay where they are now, but demand is skyrocketing. So what we need for this, obviously, is for the AI and data center demand dynamic to, I guess, rule the roost and tilt the switch back in favor of higher prices. This is why we're saying all eyes and ears will be on what's announced next week at NVIDIA's conference. So NVIDIA, other tech leaders basically are coming together to plan to solve the data center power problems. So executives from the power industry, electrical engineering companies, they're all expected to attend NVIDIA's summit. So watch this space. And of course, watch the pinup URA ETF. Now let's move to stocks to add to your watch list. Of course, let's kick off with a Paladin producer, the leading one down under, and that's Paladin. So Paladin surged about 2.8% yesterday on the ASX. They've done really well coming back up into a bear market. They're up 20% from their November low. Now, the stock was recently named a preferred Aussie mining stock by the investment bank down here in Australia called Jefferies. Why is it favoured? Well, great question. I'll answer it. It's favoured because of a couple reasons. One of those is uranium exploration assets that the company has in Canada and Australia are viewed upon quite favourably. The company also sells uranium directly to some utility companies, and all in all, it is contributing to global decarbonisation. So it's deemed also quite favourably from an ESG standpoint. Paladin is also said to be a key beneficiary of the overall uranium market fundamentals that are tilting, but we're basically saying the prices could be expected to pick up from 2030 or thereabouts, unless we get better indications of rising demand. The miner Paladin also, don't forget, they've got a Namibian Langer Heinrich mine, and this has got long-term upside potential. This is why most analysts do like the stock. The average price target, well, actually, the stock is a buy. The miner's stock is actually up 18% this year. It's at $8.96. The average price target, getting back to what I was saying, is $9.44. A top price target, though, is $12.20. But it is worth noting that this stock is pretty volatile, and it's one of the most shorted stocks on the ASX from time to time, alongside the other Paladin producer down under, Boss Energy. Let's change pace back to the US. Big moves overnight in after-hours trade. Broadcom, their shares were like a bull in a china shop after they delivered better than expected earnings results. They basically also delivered a suite of better than expected results. Dividend increased by 10% to 65 US cents, and they gave an upbeat earnings outlook, all thanks to new AI deals. So what more could you want as a shareholder? I don't know. Broadcom is a chip company that's obviously looking to rival NVIDIA AI chips. We speak about this a lot, but they were wowed by a lot of investors overnight because they basically see sales next quarter rising $19.1 billion. That far exceeds analysts' expectation of 18.5 billion US dollars. This basically illustrates that demand is continuing to rise for Broadcom's custom chips, which are being used to fill the data centers, which of course are powering artificial intelligence models. Now, remember, Broadcom is basically at the cusp of designing custom AI accelerated chips for companies like Google, OpenAI, Meta, as well as designing network storage and memory chips that are all essential in advanced computing. But Broadcom has also been specifically designing custom chips that are made by Google. We spoke about them of late. They're called tensor processing units, or TPUs. Now, this means Broadcom could control the custom chip TPU market. So that's something for you to consider. But all in all, Broadcom's AI semiconductors, they're selling like hotcakes. The CEO said that they see AI semiconductor revenue doubling over the year. So that's a testament to the company kicking goals. They see revenue getting up to $8.2 billion just from AI semiconductors. So this is really proving that it can rival NVIDIA. Broadcom is rated as a buy. Its stock is now at about $406. Some analysts see it going to 525. Last but not least, Rivkin. Rivkin unveiled its own AI chip for automated driving, replacing the need to buy NVIDIA's chips. Now, this is all part of the company's broader push to enhance their automated driving features for their future vehicles. The company is going to put that new chip that they unveiled overnight into what they call their R2 Sporty utility vehicle, with Rivkin's autonomy processor A1 chips and their new LiDAR sensor. All this is expected to boost Rivkin's sales and, of course, their efforts to drive up sales for autonomous vehicles. Rivkin is also planning to monetize the sale of their automated vehicles, just like Tesla. Of course, who wouldn't want to monetize that? But Rivkin is looking to start selling automated vehicle, that component of their technology, for $2,500 or if you don't want to pay that, buy it monthly for $50. Rivkin is also planning to release an upgraded version of their hands-free model in coming weeks, so we'll see if that'll push up the stock. But investors didn't really like what happened overnight. That's why the stock fell 6.1% in normal trading, basically indicating some concerns. And the fact that the stock has got a hold rating among analysts also reflects that there is a lot of skepticism out there in the broad market about Rivkin. But nevertheless, the stock has done pretty good things this year. It's almost outperformed the broad market. It's up 23%. And that's because it's consistently delivering better than expected earnings results. Plenty to watch and consider. Stay tuned to the weekly.